Pakistan's tax system is under the microscope. Again, despite years of reforms, big promises, and some serious policy changes, Pakistan's tax-to-GDP ratio is still one of the lowest in the region. And the big question is, why? Let's start with a common belief. If you want more revenue, just add more taxpayers. Makes sense, right? But according to the Asian Development Bank, that's not what's happening in Pakistan. Sure, more people are registering, but most of these new filers either report zero income or pay next to nothing. So you've got bigger numbers on paper, but the actual money coming in? Pretty much flat. From 2007 to 2021, Pakistan's nominal income tax revenue jumped from under Rs 500 billion to almost Rs 500 billion. At first glance, that sounds like serious progress. But when you look at revenue as a share of the economy, tax to GDP, it's barely moved, stuck around 3 to 4%. That means, despite getting more people to file, the system isn't actually collecting much more in real terms. Why? Well, a huge chunk of the economy is informal. Think cash businesses, street vendors, freelancers, people and businesses flying completely under the radar. The government's response? Make it harder and more expensive to stay outside the system. Non-filers pay much higher withholding taxes. Since 2014, if you're not a filer, your tax rate can be double, or even 20 times higher for some business transactions. Non-filers can't buy expensive property, can't register cars, and can't even get certain professional licenses or government contracts. But here's the catch. The more hoops you add, the more people just register, and then still don't pay real taxes. Sometimes, they simply file zero income. So the government ends up with more paperwork, higher administrative costs, and the same old revenue problem. Pakistan's not alone. Other countries like Rwanda and South Africa have seen the same thing. Expanding the tax base doesn't guarantee more money for public services. In fact, the ADB argues that focusing only on getting more people to register without making sure existing taxpayers actually comply just drains resources with little payoff. So, what now? The answer might not be more aggressive penalties or more restrictions. Instead, it could be about making the system simpler and focusing enforcement where it matters most. On people and businesses who are already supposed to be paying, but aren't. At the end of the day, a bigger tax base is only as good as the compliance it brings. Pakistan's challenge isn't just about numbers, it's about real participation, and until that gap closes, the cycle is likely to continue.